Every business operates with a profit and loss statement and a balance sheet. The PL represents the operations, the income and expenses of the business, while the balance sheet reflects how well you save and manage what you earn. For individuals who already have money, the process of making significant returns can be relatively straightforward. If you start with substantial capital and shift it from low-yield investments like bonds to high-growth assets like Bitcoin, you can see dramatic gains. Moving from a -5% return to a 50% return is particularly challenging if you have the initial capital. Competing with giants like Microsoft, Amazon, Google, or Apple is a different story. These companies have effectively outperformed and displaced thousands of healthy, hardworking businesses. For instance, Amazon has decimated the retail sector, leaving almost every retailer except Walmart struggling to survive. Similarly, Microsoft has a near monopoly on business software, locking in millions of businesses with multi-year contracts. In these scenarios, the competition isn't about individual effort or competence, it's about scale, market power, and strategic advantage.
Every business operates with two fundamental financial statements, the profit and loss PL statement and the balance sheet. The PL reflects the operations of the business, how much it earns, spends, and ultimately its profitability. The balance sheet, on the other hand, shows how effectively a business saves and manages its resources, detailing assets, liabilities, and equity. For individuals who already have substantial capital, making significant returns can seem relatively straightforward. If you are restarting with a sizable amount of money and you shift it from low-yield investments, like bonds, to high-growth assets, such as Bitcoin, you can achieve dramatic gains. Moving from a situation where you're losing 5% a year to one where you're earning 50% annually is a substantial improvement, but it's easier if you already have the capital to invest. The challenge becomes much more daunting when you consider competing with industry giants like Microsoft, Amazon, Google, or Apple. These companies have enormous resources and market power, making it extremely difficult for smaller players to compete. For example, Amazon has transformed the retail landscape, pushing almost every competitor out of business, except for Walmart. Similarly, Microsoft has established a near monopoly in the business software market, locking in millions of companies with multi-year software contracts. The competition isn't merely about effort or individual competence, it's about scale, strategic advantage, and market dominance. Large corporations can outmaneuver and overwhelm smaller, yet competent businesses due to their extensive resources and market control. This dynamic illustrates how challenging it is to compete against entrenched industry leaders who have the power to reshape entire sectors and eliminate competition through sheer size and influence.
Subscribe our channel and press the bell button to get our video notification. And like the video.
Bitcoin isn't a magical solution for competing with industry giants. It won't make your startup outperform Microsoft or help you build better cars than Tesla. If someone creates a humanoid robot that's as smart as a million PhDs and costs just $100 a month, they'll likely sell millions of them. Conversely, the second best robot will struggle to find buyers because people prefer the best option available. The same principle applies to launching a Bitcoin-related business. Just because you start a Bitcoin exchange doesn't mean you can easily compete with established players like Fidelity, Morgan Stanley, or Vanguard. Bitcoin alone won't make it easier to displace these giants. For instance, we invested heavily in Bitcoin and now hold $15 billion worth. This has been a significant part of our strategy, but it hasn't made us immune to the challenges of competing in a highly competitive landscape. It's essential to approach these endeavors with humility and recognize that Bitcoin's value is not a cure-all for every business challenge.
Bitcoin is a revolutionary asset with immense potential, but it's important to understand that it isn't a magical solution for outcompeting industry giants. Simply holding or investing in Bitcoin won't automatically position you ahead of established tech and financial behemoths. For instance, imagine a company creates a humanoid robot that combines the intelligence of 1 million PhDs and is priced at just $100 a month. This robot would likely capture significant market share, selling millions of units. Consumers are naturally inclined to choose the best product available, which means the second best option would struggle to find buyers. This principle is directly applicable to Bitcoin-related ventures. Starting a Bitcoin exchange, while potentially lucrative, doesn't guarantee that you will outmaneuver established financial institutions like Fidelity, Morgan Stanley, or Vanguard. These institutions have deep-rooted market presence, extensive resources, and established customer bases. Bitcoin alone won't simplify the process of competing with such entrenched players. Even with our substantial $15 billion investment in Bitcoin, we're not immune to the challenges of a competitive landscape. The value of Bitcoin has been a cornerstone of our strategy, but it hasn't removed the inherent difficulties of competing in a crowded market. It's essential to approach these ventures with a realistic mindset. Bitcoin is a powerful asset, but it's crucial to recognize that it isn't a panacea for all business challenges. Success often hinges on more than just the assets you hold. It requires a strategic approach, innovation, and an understanding of market dynamics. While Bitcoin provides significant value, it is one component of a broader strategy. Acknowledging that Bitcoin alone won't resolve every competitive challenge is key. Humility and a comprehensive approach are necessary to navigate the complexities of a highly competitive market.
There's an enormous amount of capital tied up in traditional 20th century assets like bonds and real estate, around $450 trillion. In contrast, Bitcoin currently holds about $1 trillion of that wealth. As we transition from the old world to the new world of digital assets, there's a significant opportunity to facilitate this shift. To bridge the gap, you can raise capital by issuing securities to buy Bitcoin on behalf of investors. Your role is to address key issues, provide secure custody, manage volatility, and mitigate downside risks. Additionally, tackle compliance challenges, such as enabling a Chinese billionaire to invest in Bitcoin through a Shanghai ETF to avoid legal issues. While self-custody and direct Bitcoin ownership might be ideal, the reality is that for many investors, especially those with large amounts of capital, navigating complex regulations and risks is a bigger concern. By offering a solution that addresses these challenges, you make it possible for substantial capital to move into the Bitcoin space, even if the solution isn't perfect. In a world with imperfections, providing a practical, compliant way to invest in Bitcoin is a crucial step forward.
There's an immense amount of capital locked in traditional 20th century assets, such as bonds and real estate, approximately $450 trillion. In comparison, Bitcoin represents around $1 trillion of that wealth. As the financial world evolves, there's a substantial opportunity to facilitate the migration of capital from these old world assets to the new world of digital assets. To bridge this gap, you could play a pivotal role by raising capital through issuing securities designed to purchase Bitcoin on behalf of investors. This approach addresses several key challenges: securing custody of the Bitcoin, managing its volatility, and mitigating potential downside risks. For many investors, especially those handling significant amounts of capital, these are major concerns. Another critical aspect is compliance. For instance, a Chinese billionaire looking to invest in Bitcoin might need to do so through a Shanghai-based ETF to avoid legal repercussions. This kind of solution helps investors navigate regulatory hurdles that could otherwise prevent them from participating in the Bitcoin market. While direct self-custody and raw Bitcoin ownership may be ideal for some, the reality is that for many large-scale investors, such options may be impractical or fraught with regulatory challenges. The key is to offer a practical solution that addresses these issues effectively. Even though this solution might not be perfect, it provides a way for significant capital to transition into Bitcoin, making the move from traditional assets to digital ones more feasible. In a world that's not always perfect, providing a well-thought-out, compliant method for investing in Bitcoin can help facilitate this crucial shift. By addressing security, volatility, and regulatory challenges, you can help usher in the next wave of investment in Bitcoin, driving forward the evolution of the financial landscape.
Subscribe our channel and press the bell button to get our video notification. And like the video.